My friends, what is going on? Welcome back to the channel. So I posted on my Twitter, which first and foremost, if you haven't done so already, please go follow me there. Colin_Gladman's the easiest way to see if things change on the fly, obviously, or any important market updates. I asked if y'all would be interested in doing little like quick takes, if you will, on the market. And so far, it was a very overwhelming yes, so we'll see how they go. I intend these videos to be very short going forward. However, this one's going to be longer because I want to give you an idea of what I'm going to be doing. Plus, I want to explain the rules of the game. So here's the rules of the game. You guys know the deal. Nothing I'm giving you is financial advice. You are a big boy or a big girl. At least you pretend to be on paper. So all I want you to do is make great decisions for yourself, your family, and your portfolio. Some of the setups that I talk about are going to play out beautifully. Some of the setups that I talk about are going to crash and burn. So here comes the shameless plug. What I always talk about in my Discord, which I do have a private Discord. Yes, it is a subscription service. If you are ever interested in joining it, I only open it one time every single month. I only take a small new group of students in once a month. I want to keep things small and under control in there. So I always tell them I plan on being wrong 30 to 40% of the time, easily. So like I said, some of these setups are going to play out beautifully. Some of them are going to crash and burn. I will try to let you know if I'm leaning more bullish or bearish on the setup. And it's, because this is where people are always like, oh, great, so it can go up or down. And the answer is yes, absolutely, right? I posted this the other day. Anytime I pull up a chart, there's literally like hundreds of different possibilities that I think can play out. What I'm trying to give you here is I'm trying to give you what I think is the most likely thing to happen in the situation. So having said that, I'm going to go over a whole bunch of different charts and setups, give you a quick idea of what I'm looking for, and we'll call it a day. All right. So I will typically always cover the major indexes of SPY, QQQ, and IWM, just to give you a quick look on that. Because these major indexes, think of them as kind of like fuel for the fire, right? So if I'm bullish on a setup and the indexes are all really green and helping that, that's going to be fuel on the fire to help that individual stock to help the setup play out more, and vice versa. If I'm bearish and the indexes are ugly, that's going to help that particular trade setup as well. It doesn't mean you necessarily have to have the market on your side, but it is always going to help, obviously. All right. So having said that, let me get this out of the way. The next about 2 weeks, I'm overall going to be looking for downside / bearish. Leading into this, we have an election coming up. If you're watching this in the future, today is October the 17th. But between election coming up, lots of earnings, lots of overseas data. It's just a very uncertain time. The market doesn't like uncertainty. We are just in a overall sell the rips phase of the market. And I think you can already see that post-expiration that we saw on Wednesday, where, and I posted this on Twitter, so we had an exhaustion gap, or I posted this was a potential exhaustion gap. Then the very next day, we gapped up slightly, and then we sold off. The very next day, opened up green a little bit, and had a decent push-up day. And then the very next day, major gap up off of good job report, good retail sales data, and good TSM earnings. And then what happened? All we did was sell off all day. So if I go in here in the lower time frame, there's a common gap still right down here in the mid 560s. Right there, right around 567.78. So this gap did not get filled originally. And this is what is described as a common gap. So just like back over here, I'm already spending more time on SPY than I wanted to. So just back over here, this was an exhaustion gap. This one is a common gap. When you always hear gaps get filled 80 to 90% of the time, the correct way to put that is common gaps do. So overall, and on a lower time frame, you can see here we kind of clearly got a potential double top. So I think on a lower time frame, we're probably going to kind of do one of these and work our way down over the next couple of weeks. Overall, I am still, especially if we stay above 565, I will still be overall very bullish into the end of the year with a nice year run, and that continuing on into January and maybe even February. But very much a potential clear distributive look. Like I said, major gap up and then did nothing but sell off all day today. So, and then we have Japan and China data overnight, plus we have a bunch of data in the morning, plus a ton of Fed speakers, right? So, but clearly we're going to treat support as support. So this 565 level, that is going to be that key support that you're going to be looking to hold. And if we get a really nice reaction when this common gap gets filled, because I do believe it'll get filled. Here's another perfect example, right? This one was a gap up. However, we created kind of this common range here and it filled. Back over here, this was a common gap down. But then what did we do? We worked our way up before pushing off and then gap up. And same thing, came down, filled it that same day. So those are all what you would describe as common gaps. So overall, over the next couple weeks, I'd be looking for SPY to work its way down there. With QQQ, we have a gap down at 471. QQQ was very bearish today. Opened right up. I had this key level already marked off for my voice chats that I do with my Discord. We had the exhaustion gap that we closed above the very next day, open and sold right through. You can see there was no even attempt, right, to catch a bounce. And then yesterday, QQQ was very weak, was the weakest of the indexes. And then today, same thing, just opened up right at that key level and sold off. So I do think overall 485 and 480 are going to be support. So 485 is our golden pocket right here, and 480 is right around that 786. I still think the most likely thing is kind of that 471 gap. That would also too, right? This will get all your bears coming out on Twitter and X. We start breaking this uptrend and we're coming down here and they're like, oh, you're going to spill out and go down here. And then, like I said, once we get that common gap taken care of, then we can get out of here. Let me see if that also lines up with a key fib from right in here. Yeah, so pretty much the 0.5 and 618. So anything right here, even if we get below that, so long as we recover that level quickly, I think it will be good. IWM has been the outperformer here, which is nice to see. It's nice to see that rotation. If we go back over here, I mean, IWM is still super lagging from over here in 2021. So I like the ascending triangle look. Within that ascending triangle, we also had a bull flag built out here. Excuse me. Sorry, guys. I've been really sick the last couple of days, so forgive me if I cough. Try not to do it too much. But we have this bull flag consolidated nicely, built out, starting to push up. So this is a clear daily supply area that we're in. However, what I like about it is that volume dropped off, right? Nice volume push up and then a low volume consolidation day. Overall, still think it looks good. It's 921 EMA, catch up. Just let it consolidate up in here and build out. Even if we pull back on other major indexes, would like to see IWM remaining strong. 233 is a big area for me, and then 244 top side. But easiest way to always plan out those upper price targets with your fib extension. So it makes a lot of sense, those areas that I'm talking about. For Tesla, I don't like it. We created this island top back over here. So an island top's where you have a gap up, consolidation, and then a gap down. Then basically you created this rising wedge before a bigger dump. Gap up, consolidation, gap down. Now kind of making, I would anticipate this sort of to build out into earnings. Tesla, anybody who knows me knows I'm still a massive fan of the company. It's by far and away my biggest holding. I drive a Model S, yada, yada, yada. I think worst case scenario, and even though I think their future is very bright with what they did. So if you've been following me on Twitter, what I anticipated was between delivery numbers and robotaxi was one of those was going to be a sell the news event and one of those was going to be a bump event. I thought it was going to be delivery numbers would be the bump event because they were doing so well in China. And it turned out they still had a small miss. And even though they grew year over year, at the end of the day, right, I always say, numbers don't matter. What matters is how big money reacts to numbers. And big money reacted with a large gap down on that. I was anticipating that to be the move to take us up to the upper 200s, lower 300s. by Robotaxi event, and then Robotaxi event would create, and Q3 earnings would create kind of a massive sell-off event. So I do think that Tesla's coming down to the low 200s, upper 100s. My worst case scenario is going to be coming down here and retesting this trend line around that 160, 170 ballpark before then making its move. Because from its all-time high trend line, we've had 2 false breakouts so far. So we got to go down here and find the buyers and the liquidity. And there's a lot of liquidity pools back down in here. But we'll see what happens, right? Coin has obviously been doing well, with Bitcoin been doing well. This was the falling wedge that I posted on Twitter. You had your breakout, you had your retest, consolidated, low volume down here, strong volume push up. Exactly what you want to see. However, 212 is a massive area. When in doubt, look left. 212 was massive support and resistance flip. Ton of bag holders from Coin's IPO. Remember Jim Cramer? We like Coin to 475, right? Psh, loser. Anyway, 212 came up, tested it, large rejection. Came up, didn't even test it again, tested the breakout. Now you're getting rejected off of it. So if I see it, somebody posted post-elections how well Bitcoin typically does post-elections. So obviously that would be, between your miners, Coin, Mara, Riot, CleanSpark, all those have been doing really well. From this move right here, I really like 176 for a potential. That would be our golden pocket. Plus, as I get in here closer, that's this little gap and imbalance. So anything, dip below, start to recover. I really like 176, an opportunity on Coin if we see some downside in the market headed into this next week. Nvidia, yesterday I got smoked on some puts on Nvidia, but I do like the hourly double top look. Also, the recent hourly trend, you had a strong sell-off, close below that. I do think there will probably be some support around 136.48, but if you gap below that, I think you're coming back to 130 relatively quickly. From our swing ho to our swing ho, that's a different kind of fib. From our swing low to our swing high in this range, that's that 786 area. Probably would also find some support in that low 130s. I think 130 to 131 is going to be strong support. I think you would certainly see at least a short-term bounce, but there is some common gaps down here in the 127 and 118. The reason I got puts was because I thought this gap up was going to get faded right here, and it did at first, and then it didn't, right? And so those pretty much got wrecked. Is what it is. I don't ever pretend to be a perfect trader. So yeah, unless Nvidia really sells off tomorrow, it's those puts are just rest in peace. Sorry about you. We'll move on to the next one. EMU, common gap, right back over here at this 104 level. I'd like to see 107 hold, but once again, 104. What is that? Fill our gap. And it's our golden pocket. That'll be a great spot to go long. Overall, MU, and like I said, TSM gapped up super hard and then sold off pretty much all day. So this is what I expect from TSM. So if that happens, if the overall market is weak, then I would expect that. So you can kind of anticipate an elongated, kind of cup and handle look out of MU. The first spot to see if it's going to hold is going to be that 107, because once again, when in doubt, look left. You can see the massive support, resistance flip that 107 has been for MU. So I like it. And just like I pointed out a couple of island tops, MU had created that island bottom and now is going. Definitely has had some breakaway gaps. Really like the setup for MU, depending on how far it pulls back, but I definitely think 130 plus into the very end of the year come January is very much on the table. So TSM gapped up, but on a daily basis, definitely printed a very high volume shooting star. Now, obviously, that volume is indicative of the earnings. Overall, their earnings were very good. However, I still expect this thing to come and trickle back down, just like MU did. Probably somewhere around that 0.5 to around 190, maybe as low as 185. But I think it'll be a very, like I said, going back to MU, I think it'll be a very sort of controlled, and this is what you want to be looking for, right, to stay bullish. So you had MU, the volume came in down here, volume post earnings, and then just a controlled walk down after earnings as that volume was just sucked out of the deal, right? And then as it started to curl up, so did the volume. That is overall certainly what you want to be looking for on something like TSM. The shortest swing low right here, so 197 to 194, absolutely think that's going to be a landing spot. AMD, for me to be bullish on AMD, it has to be over 164.46, which when in doubt we look left. That is going to be this high point over here. I don't love kind of this head and shoulder look that's going on. And you've also kind of got this, whoops, didn't mean to grab that, but you've also kind of got this rising wedge / bear flag look going on as well. Also, chips have been doing well. What hasn't been doing well? AMD hasn't been doing well. So I really liked it when it held over here. But then, and this is what I'm talking about too, guys, right? What'd it do with that key support? As soon as it was like, okay, we're done with key support and we're going down, it gapped below it and then sold off hard. So, excuse me, when it comes to those key supports, if you gap above them and go, that's awesome. Just like if it's a key support and you gap below it and it goes down, that's not awesome. Also, the whole history doesn't repeat, but it often rhymes. Back over here, when this falling wedge was playing, sorry guys, sometimes my mic goes bad, and when it starts flickering on me, I don't want the recording to get messed up. So if I see that, I'll be unplugging it. Apologies. Buy me a mic. No, I'm just kidding. So broke up, rolled all the way over, took out all this liquidity. Sorry. None of this will be edited out because I'm not doing that either. So no special effects, no green screens. Just is what it is. Me chilling, looking at charts. So just be careful if it does start to do some liquidity sweeps on AMD. I will like it again if it can get over that. Hopefully, but like I already pointed out, some of these other chips look like we might sell off a little bit. So AMD might be coming down here and retesting at least that key psychological level of around 150. Google. So one thing I love on inverse head and shoulders, you can see I have an alert set here, is when, once again, this liquidity gets taken out. And you can say, well, it already got taken out right here. And potentially, it certainly could have. But what I really like on inverse head and shoulders is when you just go below again. I don't want us coming down here, right? I want everybody who starts going, oh, I'll wait for this gap fill right here, or I'll wait for 150. I'll put my limit order in. And it takes out these people who are playing for the inverse head and shoulders. So if Google comes back down, right? It comes back down. People enter in to play the inverse head and shoulders. So the liquidity already got taken out once, but I would love to see it happen again. So there will be people who just go inverse head and shoulder, right? And there's nothing wrong with that. Sometimes they play out like that. At the end of the day, sometimes that's going to happen, mainly because sometimes the setups will play out perfectly to get people to trick them into the setups going to play out perfectly all the time. I always say on Twitter, the safest time to enter a trade is once a stop loss has been taken, or once all the stop losses have been taken out, right? So it swept the highs here. I'm going to take this out. So here's a quick little, this is going to be more in depth than what I wanted it to be, but just give you an idea of what I teach on a day-to-day basis. So you'll notice here, this one took out any stops that were here. And then what happened, as soon as it took out all the stops, immediately starts retracing to the downside. Then what happened? People get in here on the gap fill. So they're feeling pretty good. They're like, oh, I'm not going to worry about anything unless I start taking out this gap. But we also still have common gaps here, and even all the way down to here. So that's the most likely path that screws the most people is you come down here, right? People start getting in to play the inverse head and shoulder setup, might even start to curl out of here, and then you'll have something that sweeps the liquidity, takes out all the stops. Then people start going, oh, I'm going to get bearish. It's going to break under this 150. It's going to fill this gap. Then they enter into puts, and then the inverse head and shoulder starts playing out, right? You welcome. So I have my alert set right here. We'll see what it looks like when we get down there. Amazon, heavy daily supply up here in this 180 to 190 area. But I like the move here. Then as you can see, kind of consolidated in a little bull flag, broke out. Now it's kind of doing the same thing. They do have earnings coming up, but they had great, they were like, oh, our Prime Day was the best ever or whatever. And so I anticipate good earnings. You still see things like retail sales staying high. I anticipate very good earnings on Amazon. Now, you know the deal. All that matters is how does big money react to those earnings. But if I take a fib extension here, I absolutely think 208, somewhere between 208 to 228 is coming very soon for Amazon. And that'll be the people who always want to enter puts up here at Jeff's sell wall, right at that 200. And that would be the most bullish thing. The most bullish thing is to gap up above that key level of 200 and then hold it. And then as people go, okay, well, I'll buy the dip as soon as it comes down to 200, right? It just keeps, okay, see ya. That's what market makers and Wall Street will do to you. Palantir, this is one that people talk to me about all the time. I've been posting charts on it that it was in accumulation mode ever since it was up here in the 12 to 13. This weekly support back over here, pretty much every time I came back to 12 to 14 is where I was adding long-term shares. Now it's absolutely in the markup phase. And isn't it funny how now this is where it gets popular, right? Everyone wants to buy it up here when it's at freaking all-time highs. I said 45 was a key level to watch out for, as well as 38. This is a weekly chart. Let's go daily. So you can see that first time it came up to 38, hit, but still had a lot of hype going on. Went on up, heading up towards 45. Now it does look like it's pretty distributive to me. We also have some gaps, and this one's a little bit more breakaway gap. I can get behind that because we got above the high, plus we got above the range. Excuse me. So I would certainly look for that area to be defended. Yeah, look at that 0.5. It's always amazing how these fibs line up with key levels, right? So I definitely think 38 will be tested again. That's the first spot. You could take the opportunity to potentially go long on it. Get kind of one of these, we always call them J-hook looks up and out of here. But overall, it will stay very strong so long as that gap is defended. Certainly the first time it comes down to that area, that gap will be defended. So certainly one to keep your eye on. But start recognizing these looks on a weekly basis, right? Burn these into your head. I'll show you another one that I was screaming about. Honestly, I didn't buy, but was coin, right? Same thing, inverse head and shoulder setup. Down here on a weekly basis. Inverse head and shoulder setup. These are just A+ setups. You don't have to do options, guys. You can always buy shares. If you bought shares down in here on this inverse head and shoulder setup at $7-8 on Palantir, right? You've had a 500% run. You do not, if you just like, hey man, like I like technical analysis, but I can't sit in front of a chart. I can't do options or anything along those lines. That's fine. Buy shares. Buy shares on great chart setups and just let them do their thing. I also highly recommend learning how to sell options. Another thing I teach in my Discord. Join my Discord. All right. Last one, then we out of here. Celsius. So what did I already talk about with Google? Is sweeping, right? There is an obvious liquidity pool here and here. I would love to take both of those out. If you'll notice, once again, I have an alert set. I can't watch every chart all day, every day. So when I really like a setup, that's what I do. I set alerts. When that alert goes off, I go check it out. If I like what I see, we Gucci. If I don't like what we see, so if it's high selling pressure and it's approaching this like a runaway freight train, I'm not going to jump in. I post on Twitter all the time. You get 0 extra points and you make 0 extra dollars. I guess technically you would make more extra dollars if you time the exact bottom. But this fallacy, which is what Wall Street wants you to believe, is that you have to time the tops and the bottoms of these moves. All you should care about is, am I getting a solid return on my money? What is my risk to reward? Is my risk to reward at least 3 to 1? If the answer is yes, I think about taking a trade. If the answer is no, I think about ditching the trade, or certainly play it safer. So same kind of deal. I said this was a beautiful Morningstar setup. Sell on low volume, higher volume, low spread candle, then a gap up and a push up, and then what did it do the next day? It launched. And I also said, be careful around that 34, 35 range. And you can see what has happened. We've been dipping up into that daily supply area and getting rejected every single time. So once you get rejected there, that means you're finding more sellers than you are buyers. That's how it works. So then the market goes, okay, there's more sellers up here than there are buyers. So now we got to go where we find more buyers. And as of right now, that's turning out to be right around in that low 30 range. I would still love to see, especially with some shakeout days, that dip below, take out kind of this left shoulder area, take out the people playing the obvious inverse. This is exactly what I'm talking about with Google though, right? There's people who have obviously entered right here, playing the kind of the clear and obvious head and shoulders, and it might turn out to be like that. So another way to do it is, if it does and it starts to break out, you can wait for some type of retest before you start to move. There will always be a good opportunity to jump in. If it's like, oh, it's going or it's gapping up and I'll buy a bunch of calls right here, right at resistance. Well, that's stupid. That's how you become exit liquidity, like probably these people did right here. So just know your levels. All right. I hope this video was helpful to you. We covered a whole lot of stuff. Follow me on Twitter, like and subscribe to YouTube, all that good stuff. Much love. And hopefully we'll do more of these. I'll catch you in the next video. Have a good one, my friends.